Welcome, dear traders. Wall Street closed on Friday with a glimmer of optimism. Today, US exchanges are shut on the occasion of Independence Day. Let's try to discuss the events and prospects ahead of this trading week. Wall Street indexes closed in the green on Friday. The Dow Jones added 1%, the Nasdaq rose 0.9%, and the S&P 500 gained 1.1%. Today, global stock indexes are trading on the thin market with minor gains, but futures on the Wall Street indexes are trading lower. The S&P 500 is fluctuating in the corridor between 3,800 and 3,820 points in the early trading hours. Despite the national holiday on Monday, this week is going to be loaded with events. The highlight at the beginning of every month is the official data on the labor market, excluding farm employment. Recently, analysts have spotted signs of a slowdown in the U.S. economy. The U.S. manufacturing PMI showed on Friday that business activity in the manufacturing sector worsened in June to the lowest level in 2 years. Besides, the consumer sentiment index slumped to the weakest level in 16 months. The Federal Reserve Bank of Atlanta downgraded its GDP forecast to minus 2.1% on a year for the second quarter. It means that the national economy has already slipped into a technical recession. According to the consensus, the U.S. nonfarm payrolls are expected to lock contraction in employment growth to 270,000 in June. Average hourly earnings could have slipped to 5%. The downbeat employment data could instill recession fears. The non-farm payrolls alongside inflation data will help investors clear up the economic picture after the US Fed has already increased interest rates by 150 basis points. On Wednesday, investors will observe the minutes of the Fed's policy meeting held in June. Market participants foresee aggressive hints, bearing in mind that the rate-setting committee raised interest rates by 75 basis points. Currently, there is an 85% chance of another rate hike by 75 basis points this month. Fresh statistics might give the market a hope that a slowdown in the economic growth could assure the US Fed to soften its stance earlier than expected. This scenario is less probable because the central bank is sluggish in the policy revisions. The US dollar is still holding the upper hand across the board because there are no reasons for its weakness. Until the minutes, Fed's representatives reiterated their commitment to taming inflation. Thus, the minutes are likely to confirm the hawkish stance. Amid the fears about a recession on the global scale, investors are flocking to safe haven assets, including the US dollar. Hence, investors are anticipating the Fed's minutes and the non-farm payrolls to find out clues to further policy moves. If the employment data does not discourage the market, the US dollar index will be able to settle above 105. The USD CAD pair dipped to 1.2860 following a rally on a Friday. The loonie is gaining ground today. The currency pair might open the next session at 1.2840 and 1.2850. The Canadian dollar is receiving a boost today from rising oil prices. Brent crude futures jumped 1.49% to trade at $113.12 a barrel, and WTI futures added 1.32% to trade at $109.75 a barrel. The reason is that investors are worried again about the limited supply. The oil output of 10 OPEC exporters shrank by 100,000 barrels per day in June to about 28.52 million barrels per day. This figure is at 275,000 barrels per day down from the agreed increase. The oil exports from Libya have been trimmed by a considerable amount. Another headwind for the oil market is a planned strike of drilling employees in Norway. This gloomy picture could be complemented by global challenges in the oil market. All in all, there are solid fundamentals for the commodity-related loonie on the back of a pause in the US dollar's rally. The crypto market is trading on an optimistic note. Nevertheless, crypto assets lack any signs of breaking the upper borders of their trading ranges. Bitcoin settled above 19,000, still trading below the support at 20,400. The token has gained 2.97%, inspiring the crypto community. Importantly, the crypto market is growing on shaky fundamentals. The crypto exchange platform Wild suspended withdrawals, deposits and trading, citing financial trouble amid market jitters. In light of the recent events, its clients have withdrawn over $197.17 million since June 12. Now the company is exploring financial and legal options of how to defer its legal commitments on repayments. Amid such a background, the intraday carried off Bitcoin is seen between $19,300 and $20,000. To sum up, this week is going to be eventful, with nice trading opportunities. Follow developments in financial markets on InstaForex TV channel. Our analysts keep you updated, and see you tomorrow.